afternoon, everyone. 3 p.m. on Saturday, it is my time with you. So today, we want to cover the update IRS has for ERC. Of course, I assume you know what is ERC, right? Employer Retention Credit. So right before we go there, I'd like to share a screen with you and introduce you to our website, communitycpa.com. That is our website. And in the future, when you come to see us, if you like to make an appointment, you can simply click appointment time. And here are all the partners at the firm, so you can book our time to see us there. Of course, we have a YouTube channel. It is called Community CPA. You type that in one word, and you will come to our channel, subscribe to our channel, then you will learn all of these things that's come up. And we are very prompt in terms of things that are related to business. If you're running a business, you have every reason to be part of our listeners group. And we have been on YouTube for years and years. We have over 1,000 YouTube webinars saved in our archive, so you can go in to take a look at what we have talked about. If you come into the live session, it gives you all of the YouTube live we did, like today. Today is YouTube live. People can find us right now online from anywhere. So with those webinars, you can see that we cover important stuff. And I did an interesting talk last Saturday related to finding happiness in your business. I have a lot of people commenting on that particular webinar. It is one of the webinar has the least tax information in it, but received quite a bit positive input related to that. So now let's not waste any minute, and we go into our webinar to figure out what are these updates the IRS has for us. All right. So I'm rolling the PowerPoint just to guide me not to lose track of what I'm talking about. And this is IRS ERC update by IRS. IRS did that update on July 27th and the 28th. So just so you know, briefly introduction to me, and some of you are new to me. I am the CEO and the managing partner of Community CPA. Started the firm back in 1998. We are here today, and 20-some years later, and we have 40 professional staff and 4 different locations and over 10,000 clients under our belt. So we are a firm and collected a lot of experience. And we have very good track record of the work we do. And just before I come to the webinar, we actually received another letter from IRS telling us that one of the audit to one of our client is passed with no change. So have you ever heard of no change letter? That's what we are getting. We got one the week before. We got one again today from a client that we worked on their audit files. And congratulations to us, and just tells you how good of work we do. And I am also a author. I wrote the first book back in 2019, and I actually finished my second book, which is Appointment with Ying at 10 a.m. this February. So it's actually on its way to Amazon to be open to the public. So this is my second book. And my book is about stories of entrepreneurs. So the first book is 8 a.m. is how to start up a business, give you examples of how people were doing that. Then the second book is how to grow your business. This book is filled with knowledge and talked about pandemic time, how people scale up or scale down, right? And so it is the way how we grow business. It's a story of business owner as well. Then I'm writing the third book, is 2 p.m. book. That book is about how to sell, how to expand, how to do merger acquisition, or how to organically grow your business. So again, it is the story of entrepreneurs, story of our client, story of Community CPA. So we use those books to guide us to understand the cycle of the business people, a person don't live forever. Business also don't live forever. But business has a cycle that you can follow as well, and you can make the business live for 100 years like those big business, right? But you can also fold them in very short time. So that is my third book. Of course, all of the talk we have online right here, and we have this disclaimer to protect the interest of the firm and the professionals who work in the firm. And you want to get our input one-on-one and specifically for you, instead of taking things generally and interpreting that wrong and then applied it and having a loss. So make sure that you understand the content of the webinar, but at the same time, and you know that if you are going to apply any of these things we talked about, and you are going to be getting involved with a professional, engage your attorney, engage your CPA, engage community CPA, and then we will help you. So all the update we're talking about today, it is on IRS website. But of course, the way I do this will give you the most easy understanding for all of these updates. So I don't require you to read it, and I just want you to listen to me. If you're driving right now, and put down your phone and you can just listen, because whatever we talk about is really, you can see it again on our YouTube channel, and you also can just hear it. It doesn't need to be in writing. But if you like to keep the record, you can always go back to our channel to take a picture of those slides. Or right now, if you're sitting in front of a computer, you can, snap the picture and save the slides. In any case, if you are going to use this to make decisions, come to Community CPA. This is the link, and the changes was made on 27th, 28th. Now, let's talk about eligibility. This includes several slides right in here, and I put in the date that IRS updated this particular question, because it might have the same question in the past, but the answer was not exactly the same. The rule did not change. The answer got more specific. So let's take a look at that. Is every business eligible for employee retention credit? The answer is no. Okay, so not every business out there can get ERC. If you got some promoters calling you, telling you that you're missing out $200,000 and that he can get it for you, every business is eligible for ERC, they are lying. So if you have never caught anybody lying, you just caught them lying, because that's not true, right? And who is eligible to claim employee retention credit? This one got polished on the July 27th by IRS. IRS said some promoters tell taxpayers that every employer qualifies for ERC. That's not true, and there has to be conditions. So these 3 conditions I listed here, folks, you can qualify for one of them to get ERC. So listen carefully, you probably already know that, but you want to kind of digest the word IRS uses, and I will explain it in Chinglish, because I am really good at speaking English in a very different way. And so the IRS said that sustained a full and a partial suspension of operation due to an order from an appropriate governmental authority limiting commerce, travel, or group meeting because of COVID-19 during 2021 or the first 3 quarters of 2022. They said many things in this one small paragraph. What they're saying is that if you have a governmental order, okay, and it has to be appropriate government authority. What does that mean? That just means that it needs to be a government. And essentially in the United States of America, and when we talk about government, you know how I think about it? It is the public elected officials sitting in the authority. So that's government. So if you have a city, county, state, those are all elected officials, right? County supervisors, city mayors, and the governor, and those are elected officials. So these are the people and form that authority. These are appropriate authorities. If they give a order, and so an order is related to COVID-19 and you suffered, you had a substantiated the partial suspension, you closed partially or fully, and you may ask me, oh yeah, partially. We will mention that, what it means partially, but that is one condition. So if you have that, you are eligible for ERC. And number 2 condition, you see that or right there on the slide is not and, it is or. That means you can have the first condition. If that doesn't qualify, look for the second one. The second one says experienced a significant decline in gross receipts during 2022 or a decline in gross receipts during the first 3 quarters of 2021. And so the government says that it's your total sales, not the profit, and not some adjusted numbers. They're talking about gross sales. So you want to make sure that you have that sustained, you experience the loss on that gross sales, the first 3 quarters of 2021 and or during 2020. Okay, then again it's another or qualified as a recovery startup business for the 3rd and the 4th quarter of 2021. You see, just 3 big categories on that, and the IRS came in and made it clear, updated the wordings on this. Then who is not eligible? This is also got updated. The IRS came in, updated that list, and that was updated on 28th. And you don't qualify for ERC if you did not operate a business, you did not have an employee. Okay, very clear, right? You got to operate business, you must have an employee, otherwise you are out of question. You don't have ERC. So the example the IRS give us is the individual taxpayers who are not business owners, employees don't qualify, retirees don't qualify, people who do not have employees don't qualify, household employers don't qualify. Household employers are the families who hire nannies, right? They have nannies as their employee on their 1040, and that parent don't qualify. Employers that didn't pay wages to employee during the qualifying time period, and maybe they suffered a huge loss, but they decided to not pay employee salary, they also don't qualify. Employers who experienced supply chain disruptions but did not experience a full or partial suspension of operation by a qualifying order. What they're saying is that you maybe have to change your suppliers, but the disruption, the suppliers, did not have this order to sustain their operation, the proper governmental, reasonable, appropriate authority issued order. So that also does not qualify. It is not like, I need to buy meat, but the meat was, the supplier just closed their door. So I suffered. But you need to figure out whether that supplier closed the door because of government order or just because, they decided not want to be bothered. So they just went home. Your personal decision or supplier's decision on that cannot be on their own for you to qualify anything. And there's more to talk about supplier chain. I know that is a new thing because we have clients calling us that, saying that, someone, Momo, that's in Chinese. I started speaking Chinese. They're saying that someone called them, said that they qualify for supplier chain disruption, and then they come to us, say, hey, why don't you tell me that I can qualify that? You don't. We know you don't, and we can explain to you why. So now we see that IRS also reinforced that. Okay, the government agency don't qualify. So your state government and your city government, they don't qualify. All right. So what is qualifying orders? So government qualifying orders. So the government orders coming down to you, tell you to close your shop, that is qualifying orders. So what kind of government order qualifies my business or organization for ERC? To qualify for ERC, you need to have been subject to a qualifying government order related to COVID-19 that caused a full or partial suspension of your trade or business operation. The government order may be at the local, state, federal level. Examples. The IRS give us examples. They just worried about that we don't read English properly, so they give us examples to, getting us the Chinglish understanding. It's very good examples. A order from the city mayor stating that all non-essential business must close for a specific time period. That's an order from a city. City is elected official operated authority. So yes, that is a qualifying order. A state emergency proclamation that residents must shelter in place for a specific period except for essential workers. That state emergency proclamation, that is a qualifying order. A order from local official imposing a curfew on residents that impacts the operating hours of your trade business for the specific time period, that's a qualifying government order. And an order from a local health department mandating a workplace closure for cleaning and disinfecting. That is a order. That is a local health department. And I actually didn't really have a convenient name for you here locally. And if it is an order that comes in from health department, it is also elected officials, the government body entities, they are qualifying. Now, let's look at qualifying order continued. Can I rely on recommendations, bulletins, or statement issued by government authority to qualify for ERC? So this is an added question from IRS on July 28. The answer is no. To qualify for ERC, you must have been subject to a government order that fully or partially suspended your trade and business. Recommendations and a statement encourage you to take actions, and that's not an order, right? That's not an order. If you use third party to calculate and claim your ERC, you should ask them to give you a copy of the government orders, not a generic narrative about a order. You want that specific copy of government order. Okay, I know as a business people, we probably don't even remember what happened in 2020 by now. And if someone approached you to do ERC qualification for you and claiming ERC for you, there's two steps, right? You got qualification, then you claim. Claiming, calculation of it, that is mathematics, not that hard. It's pretty straightforward. The error for mistake is very few, but the eligibility piece, and you want them to give you the backup. So I want to see them giving you a copy of the government orders, right? And read the order carefully and make sure it applies to your business, because sometimes the order actually exclude your business. Just be really careful, right? And is being subject to government order enough to make me eligible for ERC? The answer is no. You need to demonstrate that the government order was related to COVID-19, and that is resulted in your trade and the business being fully and partially suspended. Then you may be asking me, okay, Ying, what is suspended? What means partially suspended? 10%. 10% operation that give you the partially suspended benchmark. All right. So now we are still talking about qualifying order. The next one is also a qualifying order. What does it mean to be fully or partially suspended? This is also IRS added this question and on July 28. Whether your business or organization was fully or partially suspended depending on your specific information. Example, who doesn't qualify under this? So the IRS give example. IRS said that if all your employees were able to telework, like remote work, during the pandemic time, your business continued to operate, your business was not suspended, okay? If your customers were affected by stay-at-home order, but no order applied to your business operation, you are not suspended. Your customer got suspended. It doesn't matter. It is you not suspended. If you voluntarily close your business and reduce hours of operation, you were not ordered to suspend, and that you don't have the qualifying order, right? And then, the IRS also added another question. Was my business and organization fully or partially suspended if I had a supply chain issue? That is a lot of promoters, the scammers on ERC will tell people that, oh yeah, you qualify for supply chain, disruption. That's not true. So listen up on this one. A supply chain issue by itself does not qualify for ERC. The IRS provided a narrow, limited exception if an employer was not fully or partially suspended, but their supplier was. However, it applied only when the employer absolutely could not operate without the supplier's product, and the supplier was fully or partially suspended themselves by government COVID order. See how specific that is. So your supplier has to be suspended by government order, and you absolutely could not operate without what you have to get from that supplier. In addition to have supplier's governmental order, you will need to show that the government order caused the supplier to suspend their operation, number one. Number two, you could not obtain supplier's materials or goods or whatever you need from them elsewhere. And regardless of how much it would cost you to get it from elsewhere. You see, it is not even about, oh, this thing I got from them all the time, so they don't supply to me and that is my problem, and so I qualify. No, if you can get the same thing from elsewhere, you don't qualify. Number three, it caused a full partial suspension of your business operation. So because you don't have that supply, so you actually shut down half of your your lines in operation. So you see how narrow that is. So majority of the clients we see do not qualify for supplier chain issue. And I do not want you to fall into the spam of these promoters. And I always tell folks that when you work on governmental grants like that, you want to work with a company gonna stay there for you after 7 years. Because when you get audited and when you get penalized, you don't even have a place to blame because these people already closed their door. Actually, after this update, there's already people closing their door because the regulation, the rules were spelled out so much more clear now than before. So there are people who knew that they're doing it wrongly and they are just there making one-time big buck and not thinking of anybody else for the future. Those people will disappear. They will cease their operation. You'll have no place to turn to. So don't fall into this kind of scam. Always rely on the people that you can always find them. Their business is there year after year. They have a proven credential and a credit for your trust. So that's really important. And the decline in gross receipt. That's another one, right? That's the second one. Remember in the eligibility, decline in gross receipt. How do I tell if I have the required decline in gross receipt to claim ERC? This is added on July 28th. IRS added this one because they see the needs. You may qualify for ERC if your business or organization experienced a significant decline in gross receipts during 2020 or a decline in gross receipts during the first 3 quarters of 2021. Generally, this test is met by comparing the gross receipts of the calendar quarter in which ERC is considered to the gross receipts of the same calendar quarter in 2019. So now you kind of know what they are going to, right? They want you to compare your 2019 and the quarter to quarter, apple to apples, right? Second quarter, third quarter, third quarter. So now I want you to look at this. This is the decline in gross receipts for 2020 and for 2021 are different. A lot of you, if you've gone through ERC, you knew that. But let me just explain this in a different way. So in 2020, if you're declining greater than 50%, you're eligible. In 2021, if you decline greater than 20%, you're eligible. Okay, for the first 3 quarters in 2021. But there is a little bit of calculation understanding right here. So eligibility continues for declining till after your declining is less than 20%. So I want to illustrate this in 2020 in an example. So in 2020, if your quarter 1 declined 5%, your quarter 2 declined 52%. So you're eligible, right? 52%. You're eligible. And then quarter 3, you declined 15%. You are declining less than the 20%, but your quarter 2 is still available to you. So you have quarter 2, 52%, you are available for ERC. Quarter 3, even though you declined only 15%, it's less than 20%, you're still available for that. So quarter 3, you're still eligible. Because the rule says that until you surpass the decline and the decline less than 20, that quarter you decline less is still eligible. Okay, so that's why in my example, quarter 2, you decline 52%, you're eligible. Quarter 3, you decline 15%, you are eligible. So you got 2 quarters in 2020 eligible. And in 2021, if it is 20%, if your first quarter declined 20%, okay, and you're eligible, and your second quarter automatically eligible, it is what we call the alternative quarter test. So you don't need to measure just because you have the quarter eligible, your second quarter eligible, right? So there's so much interpretation calculation in here, and sometimes even if your 2021 first quarter your declining is less than 20%, you think you are not eligible, but just depends. You may be eligible because of the 4th quarter of last year. So when you come to this kind of thinking, I say that you look for your CPA, you look for your attorney, you look for a community CPA to really do that eligibility calculation for you. Be sure to keep thorough record. Consider whether you need to coordinate with other part of your business, and such as if you are part of aggregated group, controlled group. There is a terminology in IRS, within the laws of IRS, it's called controlled group. And this is related to controlled group. And, giving this webinar, I'm not going to go there, but I will tell you. And if you and another person together, and another people, 5 of you, together owns all kind of businesses together, and that actually considered a controlled group. So your ERC calculation need to be calculated in aggregate consideration. You cannot go for your one legal entity, say, yeah, I qualify. That legal entity, no, I don't qualify. No, you have a little bigger issue on this one. So I just want to bring that to your attention if that ever it is in your mind. So that's a notice 2021-20 on Part 3, Section B, if you have to zoom in to see what is in there, or you simply contact Community CPA. And I want to cover the last one for eligibility. Remember recovery startup business? So this one is added by IRS. What is the recovery startup business? A recovery startup business can claim ERC only for the third and the fourth quarter of 2021. A recovery startup business is a business or organization that began carrying on a trade or business after February 15, 2022, and had average annual gross receipt of 1 million or less for 3 years preceding the quarter for which they are claiming ERC. And just say that if your ERC you're claiming on the third quarter of 2021, then before that, and 3 years, if you were that long in existence, but you carried business, you started business on after February the 15th, 2022, then that's where you are qualified as a startup business. Then the business can be eligible for the third and the fourth quarter of 2021 ERC. Okay? And of course, if you already claimed ERC under other conditions, for example, government orders and all that, then you cannot be also qualified for recovery startup business. That's kind of the second bullet was talking there. So the maximum amount is $50,000 for the per quarter. So we're talking about $100,000 for some recovery startup business to get ERC amount. And you should consider this one when you are doing ERC claim, thinking to make sure that you don't qualify for the aggregated group consideration. That is something very important to serial entrepreneurs, and you just own a lot of company by yourself, and each one of the company is under your control, so just be aware of that. Claiming the ERC. Is there a deadline to claim ERC? That was added on July 27th by IRS. It says that for 2020 tax period, remember you can claim quarter 1 to quarter 4, 2020. The deadline is April 15, 2024, which is next year. But for 2021 tax period, the deadline is April 15 of 2025. So the simple answer is that you still have time, right? Who can sign the claim for the refund? That is also added by IRS. So because that is just a popular question, even to IRS, we got a lot of these questions, but IRS also. So now IRS says you can sign the claim for refund if you file the original employment tax return. So if you are the filer of the original 941, you can sign that. So proprietor, that is the individual who owns the business, can sign. Corporation, that includes LLC, treated as a C Corp, a corporation. Those are the president, vice president, other principal officer, duly authorized to sign. See, people in the company can sign. Partnership, and consider that is a partnership or unincorporated organization. A reasonable or duly authorized member, partner, officer have knowledge of its affairs can sign. Single member LLC treated as disregarded entity for federal tax purposes, the owner of the LLC or the principal officer duly authorized to sign. Of course, the claim for refund may also be signed by a duly authorized agent of the taxpayer if the valid power of attorney has been filed. And you know what? Those credit meals, those promoters, scammers, and they do not do these POA. They don't do, because they don't want to sign it for you. And they don't want to act like a duly authorized agent of the taxpayer. So just be aware of that, who can sign, right? And what happened if I improperly claimed the credit? This is added on July 27th. So you can read the lips of IRS, what they're doing. They are already coming up with answers for you. They said the IRS remind everyone, anyone who improperly claimed the ERC that they must pay it back, possibly with penalty and interest. And why do they say possibly? And I guess that is, the eligibility part of the word. If you have any proof, and, maybe IRS would consider to not penalize you and you just pay interest, that could be negotiated. But, they're saying that, penalty interest. A business or tax exempt group could find itself in a much worse cash position than before they applied for credit, because paying it back is not easy. That is not, that is really true. Once you got the money, you spend it. I'm not sure if the IRS come around and goes, you need to pay it back, and you have it, So that is some consideration, and then make sure that IRS position is that you pay it back. Can I claim ERC on an amended return if I have not filed my original employment tax return? Basically, what IRS is saying is that some taxpayer, and they have never really filed 941. But because of ERC, and they are, or they filed 941 somewhat different than what they want to be, so they amend that 941. So the answer is no. Claims for refund will not be processed if the original employment tax return has not been filed. So, IRS is pretty firm on that. IRS is also very firm on W-2 side. Can I file amended return, amended 941 to claim ERC if I did not issue or file Form W-2? IRS goes, no. So, getting a W-2 in right now so I can do ERC, we heard of that. And we tell folks that no, you do not want to do that. And not only you will be denied of ERC, and you're also asking for penalties for not filing W-2 and the 941 on time. Never mind about the penalty on late payment and also late filing. So do not do that. It's not worth it. I do not care what the credit meal folks are telling you. There's a lot of them is already in jail. So just be aware of that. And, one of the things I tell my folks that when they come over and tell me about those exciting tax credit opportunity that, Community CPA didn't want to do for them, and they will say, they will tell us that what their idea is, and we tell folks that it is, of course, it is always good to have more funds in the business, but we also want to look at what happens when you get audited and you are required to pay it back, and are you going to have that? And is that really okay with you? So some people would not be okay, because whatever money they have, they spend it right away. You ask for it back, they don't have it anymore, right? So just be aware of that, and then really consider it. And we can never really tell everybody to do everything our way. And we do have people don't do things our way, Community CPA's way. And we are a firm that we really think for you. It's not because I am trying to please IRS. No, I don't think IRS needed any favor and a policeman. And it is you needed a favor, and I need to please you. But in order to please you in the long term, I need to tell you what is the result if we do it wrong. And we shouldn't do it wrong, because it's never win. And even president cannot get away from lying. And you think a little citizen like us can get away from lying? I laugh about it, okay? And we do have a good system in United of America, and to keep people accountable. And I am very proud of the people who are in government knowing how to manage the government. All right, so let's see. I have 2 more slides to share with you. And the claiming the ERC, we continue that. This is added on July 27th by IRS. Does the ERC affect my income tax return? The answer is a big fat yes. you should reduce your wage deduction by the amount of ERC in the tax year the wages were paid. So if you got ERC credit in 2020, I am sorry, you need to go back to 2020 tax return, reduce your salary expenses, increase your income, pay taxes, but hopefully you don't have penalty because it is an ERC amendment and you can waive that penalty, but interest, yes, and you get interest, you have to pay. Okay, if you already filed your return before claiming ERC, you should amend your income tax return to reduce your wage. So, you know, in the recent weeks, and we still have some hope that Congress would come up with something to allow the ERC credit be reported in the year they received. And I know I was told one of the congressmen in California proposed that to the Congress, and now July 27, 2023, IRS updated this question and with a big fat yes on it. So I don't think there is a chance this is gonna change. So my tune to my taxpayers, to my clients now is yes, you have to do it. And if you have a pass-through entity, man, I am sorry, you need to change your company, you need to redo your 1040, and you're gonna pay taxes, okay? But obviously taxes will be less than your credit because credit is a total refund. Tax is only what? The most is about 40% of it. So you do have to give back a little to the government, but it will still be less than the ERC credit. You still got a surplus on that, right? This is the last slide we have on today's ERC. And this ERC scams is something that the IRS updated on July 28. So let's go through it. It's small prints because I crunched them all in one. I wish this thing doesn't exist because it sounds like I'm scaring my folks. But no, I just want you to be aware. ERC scams. How do I know if I am being scammed by ERC promoter? Okay, so this is IRS. IRS said that how do I know, question. How do I know if I am being scammed by ERC promoter? So the answer is scam promoters are usually using several different tactics to mislead people who have no chance of meeting the requirement for ERC. And then of course they also charge an aggressive fee, often thousands of dollars, and that is not thousands of dollars. It's $10,000 of dollars. It's $100,000 of dollars. And these scammers, they're asking for 25%. They're asking for outlandish percentage. It is like there's no tomorrow. It's like you're the only client they have. They got to make a living out of what you pay them. So you really want to work with professional firms. And like, for example, at Community CPA, and we don't go with percentage. It's almost like any other thing we do for a client. If you're going to get $1 million refunds from the government, and there is no reason why professional would percentage of your refund. We do not do that. And we charge that based on the work we do and the estimated hours, even though I give you a fixed fee, but it's actually already coming through an experienced fixed hourly rate plus the time we knew how much time we're going to spend. So show you as a fixed fee, but it's actually already estimated in the back end to be our time cost plus overhead. So those are the way we charge. But the warning sign of aggressive ERC marketing to watch out for, these are the ones that the IRS give to us. There are 7 of them. So unsolicited calls and advertisement mentioning easy application process or offering a short eligibility checklist. So that's a sign. The other sign is statement that the promoter company can determine ERC eligibility within the minute. That is another sign. which is true. At our firm, for eligibility determination, we literally go through hours and hours work, because you may be coming from Texas, and we actually go into the government order and pull out your city, pull up your county, pull up your state, and figure out when is the government order existed or not. And then we do your gross sales and analytical procedures to make sure that your gross sales make sense. So we also do analysis on the aggregated group. We want to make sure that you as a business entrepreneur, you are a serial entrepreneurs, you got so many going on, and we actually do that analysis as well. So that takes hours. We're not talking about minutes. And that's a scam. And the large upfront fee to claim the credit, of course, upfront fee. These scammers, they can disappear tomorrow. If you give them fees, they probably just gonna drop you like a hot potato. You're done. And we have clients like that, already paid and then they close. There's a very large company in Texas was already shut down by doing credit meal, and some of their clients got no place to go because they were halfway in the process, so they are looking for other CPA firms to help them. So we actually will get involved with those kind of things, so we know how these people are operating. And again, fees based on percentage of refund, that is just wrong. And the IRS said that this is similar warning sign for average taxpayers who should always avoid tax preparer, like the tax people who do your taxes, tax preparer, and basing their fee on the size of refund. Wrong. Sometimes, our low-income people who gets refunds because they needed that money. If you base that on the percentage, you're ripping off the low-income folks. They really should have every penny of what they get there. So at our firm, if we see people are in that category, they really should do their tax return for free. And we forward them to the places where they do it for free. They take care of them and they can get 100% of their refund. They don't need to pay some dude for percentage of their refund, right? Prepare refusing to sign that ERC return. That's a sign, folks. And you want to understand that. And because they're trying to get away from what they're doing. And in the end, though, as a taxpayer, I also want to say that it is your ultimate responsibility to the tax liability. So a story of about maybe 20 years ago, and we have a business who actually was doing payroll with this company, and this company handled their payroll for a year and never submitted anything to the government. So about $1 million worth of 941 was actually held up by that payroll processor. Then the payroll processor ran to Mexico. It's gone. I don't know about what happened after, but I know that client of mine who were paying that $1 million to IRS for the next 15 years. So we handled their books and record after they got into this scam. And I, in the very beginning, because that time I was like almost 20 years younger than today, I thought, because it's a spam, so IRS should forgive my client. They don't have $1 million to pay for 941. They already paid it once. No, it is my client's responsibility. So they actually paying the next 15 years. So I mentioned that because it is your responsibility. You claim ERC, yeah, you can blame everybody in the world who did it for you, but at the end of the day, it's your pocket being affected. You have to refund it, not your preparer and not the person who did your return. Okay, so knowing that, just be cautious. And the aggressive claim from the promoter that the business receiving solicitation qualifies before any discussion of the group tax situation the indicator to tell you they are the wrong people to do this. They didn't even ask you about the group situation. That's the controlled group. That's the aggregated group, right? The IRS also see widely aggressive suggestions from marketers using businesses to submit the claim because there is nothing to lose. That's what they say. In reality, those improper receiving credit could have to repay the credit and suffer penalty and interest. So with that, folks, ERC is government money. Like I always tell my folks that, in business, if you can be successful without government money, that is your best route to go. As soon as you deal with the government and you deal with the regulation, you have to be serious about their regulation. And they're not playing. And they're not playing with even ex-president. They're not playing with you and me as a regular citizen. So with that said, you want to be very cautious about who you are working with and making sure you're on the up and up side instead of having nightmares, worry about what had happened. But if that has already happened to you, ladies and gentlemen, and you can talk to us and you can talk to your attorney, and there's always avenues to make things right. And I sometimes tell my client that if you owe IRS and comparing you owe other people or other banks, I would say owing IRS is most comfortable because IRS is very civilized. They have procedures in place to collect, and you can negotiate with them, and you can do installment. There's just so many ways to make your life still reasonable at the same time paying back the taxes or what you owe to them. And our webinar, it is a place we share our knowledge with you, and we give you the sincerity of how we operate and try to give you that spirit so you know how to operate your small business as well. And we always believe that, if we can all do that, and then our business will last long. We will have a legacy in our track of entrepreneurship. But if you are doing things wrong and you close your business every other day, and then of course that's a different way of running business. But our clients, a lot of our clients are here to build the legacy, are here to grow their business to the next level and to have their children take that over or selling it in a great price. And next Saturday, I'll talk about the entrepreneur's journey, business owner's journey, selling your business, all kind of way of selling. But I want to talk about that next Saturday. And here is our email, Catherine at communitycpa.com. Email her. She is the backbone of this program. And as email her, she will make sure your answer is going to come through as a webinar topic. And that will help not just you, a lot of others. And we are a CPA firm open 6 days a week. Yes, 6 days a week. We open Monday to Saturday. If you call that number, there will be a live person online take care of you, and we have appointment at the office locations where we are. And right now our Bloomington, Minnesota office is still open, and our Des Moines, Iowa office is still open. So we are we open our office when we got enough professional staff to staff the branch. So we will talk to you again. Thank you so much for being with me, and happy Saturday.